I think that's an excellent point you're asking. You will recall last year in 2017 there was a moment when it looked as if Saudi Arabia and others were looking to invade Qatar, and Turkey came to the rescue of the emir. So I think, in matters financial and geopolitical, this is certainly a quid pro quo. It's a meaningful amount. 15 billion is no small potatoes. It's an important signal, but it's not the silver bullet. Turkey needs more than $15 billion. But as you can see, we've seen some stability return. The lira is 20% off its lows from last week. I think this was an important message, but my takeaway is this is not the silver bullet. Turkey will have to make a bigger effort to stabilize the economy. They'll have to reach out to more friends as well. But really an important statement, and you can see the market reaction in the last 24 hours.
I mean, there is a very solid history of support between the two countries here. And $15 billion is a good amount of money, but you're saying it's not enough. I mean, how much would really be needed to genuinely shore up the lira and give this real sense of stability that's needed?
I think we're looking for about 100 billion. I mean, if you look at the GDP, you look at the size of borrowing that the Turkish economy has, you need really about 100 billion. And I think there's been a lot of flight money, predominantly UAE and Saudi Arabia, and that's another geopolitical fault line you all know about. But I think a lot of that hot money, which was sitting on deposit, was withdrawn. So if I look at it in totality, I think you're talking about 100 billion. You don't need it in cold, hard cash, but you need lines to that degree. And I think tactically now that, President Erdogan would be best advised to be a little bit more Sun Tzu here. These, fighting against a weaponized dollar is a losing battle. The only winner that I know is Mahathir Mohamad. I hope he's on the president's speed dial, because he did face down a similar scenario successfully and is the only example I can recall. But essentially, we're looking for 100 billion. We've seen some stability come back in, important signal, understandable in the context of the last 12 to 16 months, particularly with the support that Erdogan gave the emir. But I think there's still more to be done, and we're not out of the woods by a long way yet. But I think a lot has to do with the rhetoric. The president's got to tone down this rhetoric. He's got to be a bit more subtle, not go head to head. And I think that's the way forward from here on in. Turkey's a fantastic economy. The AKP has presided over an unprecedented increase in prosperity across the continent since they came into power. They can't lose it all by fighting a weaponized dollar.
Good, solid diplomacy is always the strongest approach. But tell us, with the money that is coming from Qatar, even though it's a fraction of the 100 billion you think would really be necessary, where need it be invested to take maximum effect?
So I think maximum effect, it's really got to go into the central bank's reserves. People have got to see that number. Turkey has spent a lot of its reserves trying to defend the currency. I think that's an important signaling effect. And then really look at what are core national interest industries which need to be protected in this incredibly volatile environment. You're talking about restructuring. So really have a prioritization strategy where you're applying cash to those sections of the economy that need it and serve the national interest.